Yo, hey man, say man, how's your day, man? It's Forever Trader GDO coming out with another video, man. We ain't about to waste no time. I know y'all eating. I know y'all having a good time. About to get in these charts. It, yo, hey man, say man, how's your day, man? It's Forever Trader GDO coming out with another video, man. We about to go ahead and get in these charts. I ain't about to waste y'all time because I don't want you wasting mine. Ooh. Yes, sir. I'm a little fool. You know what I'm saying? I'm a little fool. Let's go ahead and get off into it. I know some of y'all didn't even look at the charts, and that's okay. I would say for the most part, you didn't need to look at the charts. There's really no business for you being in the market. But for me personally, you get what I'm saying? For me personally, man, I'm on it. You feel me? I am on it. So let's talk about it. Let's dive into it. And let's figure out why GDO traded on a holiday. I do it every time. Any day. Well, I mean, of course, if I come to the market and there's just no movement, I'm not going to trade, right? But if there's movement and I see a potential setup based off whatever, I'm going to take my trade, okay? So when we come into the market, and any day you plan on coming to the market and making your money, you need to look for the draws liquidity, right? So on my screen, you have the internal liquidities, and then you don't really see too many of the external liquidities, right? So on my daily time frame, we have the relevant internal liquidities, and internals is an umbrella term for fair value gaps, inverted fair value gaps, all right? So what are these things that I'm speaking of? They are 3 candle patterns with a relationship between the first and the third candle, right? That's either wick to wick or body to body, body to wick. It doesn't matter, right? As long as there's an opening between the first and the third candle, that's a fair value gap. So you got 1, 2, 3. Opening between the first and the third, boom, fair value gap. You have up here 1, 2, 3. Opening between the first and the third. No matter how you twist or flip it, it's going to be the same thing. Just as if I came up here and I looked and I seen 1 candle, 2 candle, 3 candles. The wick is right here. The body is right here. So from that body to this wick, that is an internal, right? And it's a daily internal, so I can actually mark it up right now and just lock it for later purposes, right? All right, so that's my daily draws of liquidity on the internal, right? For the 4-hour, when it comes to relevancy, now when I say relevancy, it's what internals or draws of liquidity price action is most likely to come in contact with that day. All right. So you have this guy over here. Remember, internals are fair value gaps, inverse fair value gaps, or gaps. So you have this guy over here, and it may not look like this guy. So 1, 2, 3, relationship between the first and third, there's an opening. But look at this guy over here. 1, 2, 3. Relationship between the first and the third, there's an opening. But you have price that have displaced through it, okay? That's when the fair value gap, so like right here, this fair value gap has no action in it. It has no action in it whatsoever. This guy right here has had a full sell leg go through it. So anytime that happens, that's when a fair value gap turns into an inverted fair value gap or inverse fair value gap, however you want to say it. It doesn't matter. Words don't matter. It really don't. Okay. That's why I just stick to internal and external. Okay. So we have 1 draw liquidity, internal liquidity right there. We have 2 draws of internal liquidity right there. And then we have this guy right here. Now, this is the whole reason why I took my trade today. And even after the market closed at the time it did, I held all the way until the opening of today, the new daily candle, which is like 6 o'clock, right? I held. And why? Because you have to understand trading and what trading really is. Trading is nothing but internals and externals. And I can show you right now what I'm talking about. All right. So when we're talking about externals in the perspective of breaker structures, right? Not just highs and lows. This guy right here is the external high, right? And you see, I'll remove this blue one if I can for you guys, so we don't have that really in the way. So let me just delete him real quick. Okay. So this is the external high for the 4-hour time frame. Okay. Again, the external high for the 4-hour time frame, meaning and this is the low. All right, so what does that mean? That means that on the 4-hour time frame, if we get a candle that displaces below this point, right, that is a break of structure to the downside. And what does that mean? That means price action is telling us that we are wanting to go in this direction. All right. Okay. So being that every time frame has two objectives, right? Internal and external. Price action is either going from internal to internal or internal to external, right? So if these are our externals, right, and we see that price was at one point down here in the internal, based off of what I just said, what does that mean price is going to next? There's no more 4-hour internals in between. You could have this guy right here. So remember what I just said. Price action is either going from internal to external or internal to internal. Never external to external. Never. Okay. So if price action is right here and we have a reaction, which is a break of structure of some sort, where could we anticipate price action to go? We can anticipate price action to go from this internal to this external, right? If we were on a downtrend, we can expect price action to go from this internal to this external, all right? Or, as you can see, there's an internal before we actually get to the external. Price can go from this guy to this guy and then back up to this guy. All right. That's all price is doing. Don't let anybody tell you anything different. It's that simple. And I'm not trying to talk down on anybody because there's multiple ways to skin a cat, right? But the thing is, you don't want to be in an industry where you don't understand why something transpired, okay? You want to understand every single thing that happens in your industry. And a lot of people don't understand, oh, yeah, I got faked out, or, oh, yeah, that's because it came in contact with the high time frame internal, or that liquidity, that external liquidity on the higher time frame was taken and it flipped, okay? Because when it come in contact with these liquidities, you should expect some type of reaction. When we go ahead and swipe a external high or low, you should expect price action to go find an internal. And when we touch an internal, you should expect price to either go find internal of the same time frame that's on the way to an external, or if there's no other internal, straight to an external. So let's go ahead and get off into why I took the trade. I mean, I just showed you guys, but let's look at it from the time frame of, let's get a little ahead of ourselves. All right, so that's the 2 minute, the 4-hour internals, okay? We also have, I'm about to say that's the wrong internal for sure. I know it is, yeah. We also had some 2-hour internals. I had commented on their guy's post, man, and he was like, nobody's looking at the 2-hour internal. I'm not going to argue with nobody, dude. I've been doing this for like 7 years, okay? I've made a lot of money, I've lost a lot of money, and I've made a lot of money, so I'm not going to argue with anybody about this. Every time frame is important. Now, it's up to you on what time frame you want to use, but for me, it's the 1 hour to the monthly, right? So 1 hour, 2 hour, 4 hour, daily, weekly, monthly. Those are the time frames that I use when it comes to following the higher time frame trends, all right? Because you could go to any time frame and apply this. It's fractal. You could go to any time frame and just use that time frame to either wait for price to touch that time frame's internal, then catch it to the external, or wait for that time frame external to be sweet and then catch it back to an internal. It's that easy after the expansion. You know what I'm saying? So today, being that around 9 o'clock, and I kind of had a feeling that it wasn't going to get done before it closed because the market closed early. The market closed pretty early. It said it was still open, but it wasn't open. It was closed. All right. So we all know what the exceeded edge model. The exceeded edge model is break after 9:30. All right. Contact with the first high time frame internal, right? And then being that contact, you wait on a reaction, which is a break of structure. And then you catch it to your points. All right. So at 9:30, let's see how this went. Okay. Boom. At 9:32, we broke to the upside. And as you can see, man, we were pretty much in consolidating. Yeah, this is pretty high right here, but we were pretty much in the zone, just consolidating. But I had the utmost confidence in why. Because I paid attention to the higher time frame. Yes, I'm on the 2 minute, but I'm not paying attention to what the 2 minute does because I understand that we focus on the higher time frames in order to get our draws of liquidity and get our trades. So being that we are in this 4 hour internal, man, and then look, just let's think about it like this. You have 4, 8, 12, what? 16. You have 16 hours damn near of price action telling you, hey, we do not want to go past this guy. And what is that guy right there? That is a 4 hour internal. All right. So, yeah, it was rocky. Yes, it was, slow. But again, I've been trading for so long and I have confidence in myself. So that's why I stayed in my trade and it played out. From the entry, it gave me about, because on my unregulated broker, it allowed me to stay in the trade. It gave me 51 points. Again, at 5 contracts, okay? At 5 contracts, that's $510. At 10 contracts, that's over $1,000, okay? All right? If you're trading at $1 a point, if you're on an unregulated broker, that's $51, all right? $2 a point, of course, 100, right? So 51 points is more than enough to get what you need in regard to profit for the day. And I know a lot of people would disagree with me on trading the holiday, but and I would understand it too, because why do that? Well, the reason I did that is simply because there was a high probability setup. And what was that high probability setup? Okay, every time frame has 2 objectives. You have this guy right here, which is the internal, right? And then you have this guy right here, which is the external. Price was in the external of the 4 hour time frame, right? We had over 16 hours of rejection. 16 hours of rejection, all right? So me doing the math and me just having so much time in the industry, man, I felt more than enough confidence in myself to stay in the trade, and it paid out for me. Would I recommend you to be trading the holidays? Of course not. It's not the smartest thing to do at all. I'm gonna keep it a buck with you. It's not smart at all. But again, to each its own. For me, I had the utmost confidence in my trade, and because I had the confidence in my trade, I came out with some money moolah. You hear me? Yeah, yeah. I know you hear me. Yes, sir. So, hey, man, I know you're having a great day, man. It's Forever Trader G. Come back with another video, man. If you guys want to learn how to trade like this, man, join the Discord, get around like-minded people. Visit neverquitexceed.com. Hit the link, become a profit titan, change your life, man. Yes, sir. Don't eat no more food now.